Okay, I'll also record it on my computer just in case for backup.
Yeah.
Okay, you need to give me permission to record. It's okay if you have started recording.
I'm giving you permission.
Okay, okay, fine. Okay, we start then.
Yeah.
All right. Thanks everyone for joining this meeting. I'm doing this Ask Me Anything with Quora. It's about the Watanabe show which he is running. So thanks Quora for doing this and letting us know more about the show and offering this platform to other people so that they any questions if they have they can also ask. So Quora doesn't need any introduction. He has been doing a lot for the trading community. We have all seen it on Twitter. He shares shares for free a lot of research ideas, a lot of trading ideas. All those are back tested. So he has been doing this for a long time, and it's kind of him to do it for free. So let's start about the show now. So Quora, before I ask what is Watanabe, what is the show all about? Where did this idea come from in your mind that do a talent show related to trading, wherein there will be few women who are not from trading background at all, and you will train them and do a show and try to make money out of that those trading ideas. So where did this idea come from in the first place?
Actually, there's one Shark Tank, right? Shark India or whatever.
Yeah.
That there's one more show in US. It's by a Russian guy. There are quite a few interesting guys there. Like Apple's Steve Wozniak is one of the hosts.
Okay.
Quite a few interesting guys. Not unlike Indian, where they made a little. It's a very professional show. What they do in US compared to what they have done in India. So as I was closely watching one of those videos, because my background is in trading, why not do something on it? That's when thought we'll make as a participation or contest instead of making a contest, because you can select 6 people and give them the money, and then one of them will come out as a winner. But like too much pressure on the participant. They feel bad if they lose. So let me take that responsibility, and I will just train all the participants and let them trade whatever I say. So either the defeat or the winning is on me now. So participants doesn't have any pressure. Now, basically Watanabe is a very famous surname like our Radha, Rani in India. If you anyone Radha or Rani, there might be a chance that 1 in 10 might reply, yes, my name is Rani, what do you want? Like the same thing is Watanabe is the famous, very common surname in Japan. And the thing with the Japanese housewives or the family is they're like traditional like our Indian families. Like the husband are supposed to work.
Yeah. More oriented towards
takes care of the family. I mean, there is nothing wrong taking care of the family. You can also go to work, but also you take care of the family. And because whatever the pocket money or whatever it is that comes into her, they instead of putting in bank, because interest rates in Japan are very low since 80s. So to maximize the returns of their pocket money or whatever. So they form a group with their close community, friends and family, right? So and then they exchange ideas on how to trade. And that thing is a wave in Japan, in the sense the housewives total amount that they trade is probably 10% of the total trading volume in Japan. So,
wow.
Something like that. I don't know the number. It's a very big number.
a big number, yeah.
And that's traded by Japanese housewives. And because the housewife common name is Watanabe, so it's a common word called Watanabe traders or whatever in Japan. It means reference to housewives who are dabbling in currencies. So some people make money, some people lose money, but they don't care because it's a small money that they get either from as a pocket money or a usual like household planning. So because of that, I chose a name, the same name,
Yeah, it's a cool name.
rather than reinventing the some Indian name and making a. I mean, it's very difficult to get creative.
Yeah, just like some of the IPL names, Telugu trading giants.
Correct. Yeah. So, and now the idea here is I've selected like actually I'm little what do you call as it? I didn't receive much participation. So even though we ran this campaign for about 10 days or more than 10 days, I had only 20 applications, 20 applicants. The applicant was just a form filling and you have to put a picture. Out of which 20 people, when I called them back, only 10 people responded, 10 or 8. And instead of choosing down all the, again, cutting the 5 participants out of the 7 or 8 who have completed the full application, I chose all of them. Like, I think now there are about 7 people in the participants group, out of which only 1 or 2 knows a little bit about trading. Others don't know. So I'm like training them and trying to get some discipline or whatever in terms of how to go about trading or investing. We started with 2 lakh. That would be the average Indian account size. I mean, we could have started with 10 lakhs, but again, I don't 10 lakh number is managed by most of the Indians, whoever starts in trading. Even if Zerodha's numbers, the average account balance is only about 70K or something like that. So we are somewhere around that number, like, and that is funded by me and few of my friends.
Okay. So let me ask a question which has come from Prathamesh on that only. So is it that each individual will have 2 lakhs to trade, or is it like 2 lakhs of
2 lakh total amount for 6 people? And these 6 people, the reason the 6 people are handling the account is it's very difficult to get up every day in the morning and turn up for the show.
Okay.
So they rotate each week. We need 6 people. I mean, we could have done it with 1 or 2 people also, but it is not their job. It is not their day job. So it is very difficult for me to expect them to turn up at every morning 8 o'clock and again at 3 o'clock. So they will rotate. So the pressure is off on them in terms of their schedule or what.
All right. Okay. So it's the 2 lakh in total.
It's a 2 lakh in total. You can consider all the participants as 1 participant only.
Yeah. It's a shared work between them, getting up every day and running the show.
Correct.
Yeah. Okay, I'll move on. There are a few questions that have come in my DM, so I'll start with those maybe. Just give me 1 second. Okay, so there's this question from Gaurav. He's saying, what is the criteria to select trades if the backtest data is small? So one of the trades that you had shared is on Bank Nifty Future. And that trade had about only 12, 13 data points from the backtest perspective. So is it a good idea to run trades, which have such amount of less data of backtest to confirm that trade? That is his one question. And second is, how do you select the capital percentage, in each of the trades to be deployed? So what is your rationale for capital allocation to your trades that come? So that is his second question. So if you can answer that.
The first question is He is basically talking the trade which we placed on 1st April. So this is the one. And this particular trade has a history of only how many
15 trades, I think.
right? The whole point is Bank Nifty doesn't have a data going before that, right? So there is no way I can get more data. Yeah,
Okay.
actually, I wouldn't place a trade if the number of instances are 25. At the same time, here I cannot manufacture 25 trades because there is no way I can get a Bank Nifty 25 years of data.
All right. Okay.
So I'm personally, statistically speaking, I'm not confident on this trade, but at the same time, the average profit is, if at all it materializes going forward, it is very high, like 7.7% median and 11% average. This average is tilted because you made 80% in 2009.
2009. Yeah.
So if you remove that, you still get around midpoint, 7%.
Okay.
And this trade is only for 3 months holding period. I don't mind if I'm getting 7%, I don't mind deploying some of my capital. Now,
Okay.
how much capital do I deploy the whole capital? No, because this can go and backfire like 14% down, or maybe twice the amount in real trading. If the historical data is showing you 14% maximum loss, perhaps expect 20%. So there's no way I can take 20% hit for a 7% or this number, percent expectation. So probably I would deploy 10% of my capital.
Okay. Okay.
And my idea is get as much diversified as possible. Like if you find 10 or 15 trades out of like this and place all of them, yes, you may match at least Nifty. If you don't have any idea, put that rest of the money in Nifty and gold bees or whatever, like whatever the portfolio combination that you are comfortable with.
Okay.
If you think you have an edge, here I definitely have edge. This is a very good trade. The only problem is number of instances are less, but I can't manufacture number of instances. Probably might deploy 10% on this.
Okay.
Why we have deployed only 2,000-3,000 is we are running on a very small capital, like 2 lakhs.
Right.
Which we have already selected one portfolio which is 40K worth. And we also allocated like about 1 lakh capital, something like that, 1 lakh into option trades. So we only get 1 lakh, out of which we also deployed 10-15,000 into the insider trade, insider screen trade. Yeah, so that's the reason it's put 2,000. Probably we could have put 5,000, but we'll see. I mean, the UPI transfers were not happening on 31st and 1st. It was very difficult to put the money into the account. So probably Monday morning, if I get a dip, I probably might add like about 5 or 10 capital. Here my capital is about 1 lakh.
Okay.
So I would increase my Bank Nifty, Bank Bees to 5K. So you can see all allocation here. There is this trading journal.
Right.
So every day it will be up somewhere around 10 o'clock in the night because your settlement from your broker comes around 8:30.
Okay.
We need to collate and we need to put. So every day it will come. This particular for the trades we placed will come around 10 o'clock every day in the night.
Okay.
And you can access them. It's a free journal.
Yeah.
And all the trades are here. Trades we have taken and whatever trades we have closed. Just let me hide this video. You can see. I mean, this is. You can also provide me feedback how to improvise anything either by commenting on the YouTube channel. The link is very simple. It's YouTube C and watanabe.in. Subscribe to this channel. You'll get all of them, all the videos and whatever.
Okay.
And all the trades we place will come here. So, and any comments, any feedback, please do provide. We will try to incorporate if it is possible. Some of the things which are not possible, yes, it is difficult for us to include that your feedback. This is my trading journal. This is the format I follow. So, what is the symbol? What is the entry date, exit date, and why we have made this trade? So this is so, and if you don't understand what is written there, I have again given some. My idea here is give 90% or maybe 80%. I mean, I cannot tell you exact percent, which are free links. Obviously, I can put some firewall, paywall links, but I don't intend to do that. So these are all free links. Some may be paid links, right? So it's, but yeah, my intention is to give a free material. So you can go and read.
Okay.
Understand.
Yeah. So Cora, I also have got one question.
Yeah.
It's again from the trades that you have taken.
Correct.
One of the trades that you took on, I think 1st of April was going long Nifty by ATM calls.
Correct.
This one, 17,400 calls. So I was watching that video and I saw that you were kind of rushing in to get in that trade. You know, that even the entry and exit also you were trying to book the profits quickly enough. What was the rationale?
The rationale is I was just playing for the gap fill. So Nifty opened little down on that day.
Yeah.
And my expectation is it will fill the gap.
Okay, so there was a gap on the daily chart.
Gap, a little gap down. So I had to take the trade at. I could have taken futures, but as I said, we don't have money, and so I've taken a 50 delta, which is at the money CE. And
right.
I exited quickly because that's when the gap filled. I think there was a 30-point gap, and the gap fill in a 50 delta call, it will be about 15 points.
15 points.
Like that. So that's enough for me.
So by gap fill, you mean the gap down which has opened?
Correct. Yeah, if I had held till evening, I would have made much more, but no, my intention is okay. After it gap fills, let the market do whatever it wants. I am not interested.
Got it. Got it.
So, and again, in this option buys, you have to be a little quick if you see some profit, right? Because there's only a 50% chance of it becoming profitable trade in a Kuhlman delta terms, even though delta is not your probability or whatever.
Right.
600 is not a big, it's not a small amount. It's a, okay, for a 1 lakh account, we are like building up the capital. So yeah, it was a quick out, looks like a scalp trade, but the rationale there was gap fill. Yeah.
Got it. Got it. Got it. So next question I have is from Farhan, I think. I'll read out the question for you, Cora.
Yeah.
It says, let's say there are two stocks. Stock one with a high beta and a low standard deviation, and stock two, the low beta percentage, high standard deviation. Which one would you prefer among the two?
See, if it is a buy and hold perspective, right? I always prefer low beta because there is no risk of entering into a big drawdown.
Right.
In fact, I would avoid high beta stocks in my long-term portfolio.
Okay.
If you think you have some magic of market timing where you can get in and get out quickly, I would go for high beta, but I wouldn't suggest that high beta stuff to a normal investor or a normal trader who doesn't have the discipline to get in and get out quickly.
So can we say that unless we are playing for a short-term momentum, it's best to keep high beta stocks at the bay and just go ahead with the low beta stocks?
Yeah, so avoid high beta stuff and just go with low beta stuff.
All right, okay.
If it's a long-term play, if it's a short-term play, and if you think you have an edge, then go with high beta stuff.
Okay, all right.
The thing is, when the market is going up, it looks fun, but when they go down, your beta is also playing like a fire. If you select a stock with beta 2, if market falls 10%, obviously will down by 20%.
20%, yeah.
Now you know the drawdown math. 10% drawdown, you have to make 11%.
Yep.
If it is a 50% drawdown,
you have to make 100%, yeah.
Right. So whereas a low beta, if market falls 10%, if you have selected a stock with 80 beta, it will only fall 8%.
8%, yeah.
The pinch. It's easy to recover from drawdown. So this whole thing is called at a high level, very fancy term is volatility drag. So that's the effect on your beta stocks.
Right. Farhan also has one more question. He says that suppose one is following a 3-factor model with a value score, momentum score, and quality score on a 1 to 100 basis. Then how to create a Z score out of that? It could be any. It could be any other or more factor model with a scoring system, and how to create Z score out of the same. So basically what he's trying to ask is, if we have a 3-factor model with value, momentum, and quality score on a 1 to 100 basis, how to create a Z score out of that? Kora?
Yeah, I'm just reading this question. So
okay.
Now this is forget about your factor. You can take anything. Now just read this carefully. This is a link. Let me drop down this so that it doesn't. So go here, resources, historical reports, and come down. Just select index data, and here you will get about indices, about broad market indices, and all the description. Now you have something called a strategy indices, right? So this is various strategy indices. Click any of them. This is what the NSC's methodology. It's a big document about I don't know how many pages, right? So now go to this strategy, right? So I'm just taking you where exactly they talk about JED score. I think page 107. Let's see how he has done it. Okay, so this is how he selects Nifty 200 momentum. So your momentum is basically based on 6-month score and 12-month score. And he will tell how to calculate that momentum ratio. Momentum ratio is nothing but price return divided by standard deviation. So this is your factor. Now this factor could be, as you said, 0 to 100 or anything. Don't care. So it's a number. Now you have 3 or 4 numbers like this, right? For each stock, one momentum ratio. So for each portfolio, you will have one number. And this number, to convert them into Z score, this is what you need to do. So you take all the 4 stocks and calculate the standard deviation of all the 4 stocks. And average minus standard deviation divided by standard deviation. Now let's say if Just give me any random numbers. I'll tell you. B, C, D. 4 factors, right? Tell me what is the number for this? A. Let's say 25, right? And this may be 30. I'm just whatever you told, 0 to 100 scale.
Yes.
Right? So and this is 10. Now what you need to calculate is average of this, right? Average of all. I will just put average of all. So that is average of all this and standard deviation of all this. Somebody is trying to join. I will include him because I mean it's a distraction for me coming and going in. So, now what is your formula? Stock return minus average. So stock return minus your average. This E2 you don't want to move, so lock it and divide by your standard deviation. Again, G2, this standard deviation you don't want to move, so I'm locking it. Right, so these are your converted scores now. Now the second step is how to calculate Z score is normalized Z score. So if Z score is greater than 0, you add 1 plus that. Otherwise, if it is negative, 1 minus power of minus 1, right? So this is a negative number. So we'll deal with that later. So the Z score for this will be 1 plus this. And this is same. And for this is minus and power of minus 1. That is 1 minus this number. And power of minus 1. Where is the power? Tilde minus 1. The idea when you normalize is everything will be positive. Now this number is negative. Now you get a normalized. So now this is what you got, 0.89. The 25 got translated into 0.9. 30 got translated into 1.3. 40 got translated into 2.27. And 10 got translated into a lesser number, which is 0.4. Right?
Okay, all right. Thanks, Cora. Okay, Pranav has a question. He says that for someone who has maths background but is not good in statistics, what books would you recommend?
Okay, so there are two things. Yeah, this is the question, right? So there are two things here. I don't know your age. At least I'm like early 40s, and I don't have any intention to learn any more new subjects, right? Because I have so many other things to do. I have to take care of my kid or family or whatever. So what I would do is I will only read the basics if I want to learn the new subject. And there is no way at the age of 40 I will get a job in that field which I'm learning now. So let's say I'm learning math now. It will take at least 5 years for me to learn whatever. And by the time I will be 50, and who will give me a job? I won't even get a school teacher job if I start learning. But yes, I need to learn. So I will only learn what is the basics. Now, the same approach is for any of the subject. So for statistics, just read. This is my favorite book, Derek Roundtree. And again, This is the one. So it's a 300 or 500 rupees in India. It's not like tons of money also. Yeah, just 350. There's a discount, big discount. So buy this, read, and it's a basic stuff. Even in the basic stuff, if you don't understand, grasp as much as possible, and you don't require full statistics also. All that you require is if you know how to visualize standard deviation and a little bit of statistical testing, that's enough for you. So you don't need to go in deep because you are not getting a job either a statistics teacher or professor or some other fancy job. You are already fixed in your career, and there's no way you can learn now statistics and waste another 5 years of time and become a professor in statistics. So I would say this book, and if you have a little time and energy, anything on Khan Academy would be.
Okay. All right. Cora, there's this thing that you have put in on the Watanabe side, which says that you'll continue to trade until 2 lakh becomes 1 lakh, which means we are in a drawdown of 50%, or the capital doubles.
The double is, I just wanted to clarify it.
Yeah.
So I think people might be talking about here, the first entry criteria.
Yeah, I got a question that how Cora intends to double his money in 6 months. So I thought if we can do it, then we would probably not be running this talent show.
Yeah, so what we do? So either if it goes below 100K, we might as well stop the show because that is the criteria. Double it is basically just to create excitement. It may or it is definitely not possible. But if it is possible, well and good. But I am not aiming for double. I'm aiming just create an excitement about the show. So now if I say watch the show, we trade, maybe only 5 people come. If I say to double it, maybe 10 people will come. Now, can I double it? No. If it happens, it may be luck or anything else. But my aim here is at least match the Nifty performance. So if the Nifty gives a 15% returns from here, I make 15%, I'm good enough. If I made a little more than that, did I take excessive risk and this, that? Yes, maybe. I'm also happy because 2 lakh account, yes, you have to take a little bit of risk. Unlike bigger accounts, which are anything about 20-25 lakhs.
Right.
Yes, I want to clarify. My aim is not to double, just to create excitement about the show. Like if I say I'm trading, probably only 5 people watch.
That's true.
I'm doubling it. 10 or 20 people might say, "Oh, let's see how this guy double it." Right? So.
Okay, so I have exhausted the questions that I had received on DM. So folks who have joined in live, if you have got any questions, you're free to ask. So please go ahead and ask questions that you might have. Pranav has already asked. Kavita.
Yeah, so there's a. No, I mean, you can type in the chat.
Okay, yeah, that also works.
How much to allocate between large cap and mid cap and small cap, right? So this is a very interesting question. So if you don't know or don't have the cap to do this, which is very difficult, suggest everybody to know the basics of whatever the portfolio that I have suggested. Right, so this is an open link. There's no paywall or whatever. So now the same methodology, or then there are few other methodologies. Like you select, this is your large cap, small cap, mid cap, and you run the whole story. You will get just like this. Or there is a mean variance approach, right? So search on the internet. If you try to, if you understand everything, it's well and good. But at 2 lakhs, you don't need all this fancy. You just go here. I'm again navigating this straight from the home page. Your idea should be get as how NSE behaves, right? Or how the total Indian market behaves. So now historical reports, indices, about indices, broad market indices. Now you have tons of indices, Nifty 50, Nifty Next 50, Nifty 100, and all this stuff. And NSE will keep producing all these indices because each index, if you want a real-time data of this, you need to pay. And if you want to use how these 50 stocks are weighted, and then you have to again pay Nifty NSE guys something. And if you want to launch an ETF or anything, you have to pay a licensing fee for NSE. So because they keep getting the licensing fees, they will write thousands of indexes. I mean, yeah, because it's a business for them. Obviously, they want to grow their business. Now, what happens is you'll have your entire Indian stock market is organized like this. This is Z. So this is what's her name? Priyanka. So your Indian NSE listed stocks may be around 1500 plus. Total NSE listed. If there is a way to invest in all the 1500 stocks, I would invest because I'm getting ownership of all the 1500 stocks. Obviously, it's not possible. So now NSE is doing a decent job. Like they're chopping all the 1500 companies into various indexes. So the top 50 most companies. This is your Nifty 50, the top 50 companies. How much weight is they're having here? It's a little outdated. How much weight? You can read here, right?
67%.
So now if you get NSE 50, sorry, this is Nifty 50, right? Nifty. If you just buy Nifty 50, you will get that much ownership.
67% of 1500.
And now that is a large cap. Or you can also define, okay, my large cap is entire Nifty 100, right? Because this is next, the stocks that cannot make Nifty 50 will go into Nifty 50, next 50. So your next 50 gives you an exposure of 10%. So this is next 50. Now consider this as your top large cap, something like that, right? Now your large cap becomes 77%. Now you can define small cap and mid cap the way you want. Now what happens, NSE is, now we are done with 100 stocks, right? 50 and 50. And you go to this index, it has 500 stocks, represents all the top 500 companies in India. Now, if you invest in these 500 companies, you will get 96%. This is NSE 500 index. Right, so now I'm left with only 96 minus 77%. That is nothing but your mid and small cap index, this one. Right, so this entire index is same thing, 96 minus 77. So this is, what is that index? Mid small cap 400. Mid small cap 400 index is 19%. Now this mid and small cap 400 is split into two. What is mid cap 150? What is NSE doing? If you can tell me, some of you, I don't know why it's not confirmed. I think it's about 10%. Anyway, so I'll fill that up for you. So this 400 is split into mid cap 150 and small cap 250. So your 100 rupees. So you will only miss 4% if you don't cover any of this 1500 minus 500 companies. Don't bother too much about them. You are only missing 4%. Now your allocation should be something like this: large cap 77%, the entire mid and small cap 19%, and maybe 4% you play on tips from your friends or whatever. But if you stick to this ratio, you will do good. You will do good in the sense at least you are mimicking Nifty or mimicking entire Indian stock market, which is this. I will do it. I mean, I don't want to. I mean, let me give a chance to others because it's very simple. So I will upload the sheet, so you will get an answer to that. I'm just seeing any chat. So yeah, I mean, that's the only question. So this guy is asking, Ankit, can we get a recording? Yes, I will. I will process this and I will upload it on YouTube, so you can watch it there. There's no stop loss because see my insider buy portfolio. I have just allocated what 2,000 rupees, and my capital now is 2 lakhs. So if the entire stock goes first, I lose only 1%. For that 1%, why mess up the trade by
putting stops?
Stops. Yeah, I mean, like for 2,000, what stop I will put? Like, okay, can I put 200 rupees stop? It's a waste. Yeah, I'm losing 200 rupees every day in some form of the other. If I buy a coffee, that's a waste of 100 rupees, right?
Right.
Why bother about 2,000 rupees investment and putting a stop loss or whatever? So there's nothing. So the exit criteria would be I would wait at least for a quarter, because my rationale is these guys might have some info, which is when they announce the results or something like that. So I will try to hold at least for 3 months. If the stock doesn't react, I would exit after 3 months. And the maximum I lose is 2,000 rupees. And that is provided if the stock goes to zero, which is unlikely.
Okay. Cora, Gaurav has got a question. He wants you to talk about your insider buy portfolio ideas.
This is a very, very old idea. So it's a very statistically spoken about and has done a lot of research. So it's oh, this NS is going in circles. This is where the first original idea that I am aware of. There might be a literature before even this. This is predictive and statistical research, statistical properties of insider trading. So this is a very, very old idea, which is published by Victor Neidorfer, who is my mentor or guru or whatever you call. And his professor, he is his professor. James Lowry is Victor's professor, or James Lowry's student is Victor. He has done PhD under him, some relationship like that. So it's a joint paper by them. So do read. It's the same idea. Now, if you go to BSc, you select all the stocks. Sorry, you have to search BSc Insider trades. I mean, BSc is a little organized. I think this is a place, right? I just follow all that. Every day they have to. Every day they have to report. I mean, there is a schedule. Like the moment any company executive, as defined by the SEBI, makes a purchase or makes a sell, he needs to report within some standard time. I don't know what is the time window, maybe 3 days, maybe 4 days, something like that. So he has to report, and you will get all the data here. Okay, from date, just put any date, right? So I want last month. Actually, I don't want, I mean, I can't do this because there's no time. I'll just say 2 days, right? So these are all the, okay, why there's no maybe holiday? What's happening here? Okay, I think ahead of the results, you were not supposed to trade. That's why you are not getting many trades. Or oh, yeah, this is the link. Sorry, I mean, you can again search on the internet. You will get this. Excuse me. So these are all the trades. I'll just restrict to just one day. April 1st, April 3rd. Yeah, so these are all the trades which are reported on April 1st, and they would have made the trade sometime 3 days or 4 days back. Go through all of them and find insider, because these are all trusts. Trust can buy for whatever reason, which I don't understand, but I would be more interested if a name, individual name like this comes up. Right? This guy is Anupam Kumar Taparia. How much he has put? He has put it's a disposal, buy or acquisition. Did he put significant money? It's up to you now to define your own screen. So he has put only 1 lakh. I can't read this, maybe 1 lakh or 10 lakhs, I don't know. Now, if that guy is able to lose 1 lakh, why can't you lose 1,000 or 2,000? That's what my intention is. Do you buy all the stocks? No, you might want to filter based on some criteria. That could be like only small caps, only big caps. Now again, big caps, let's say this is JSW Steel. So some JSW Steel son or owner comes and buys. You don't need to follow him because he's already rich. If he buys 1 crore, how does it matter? Because he's already, JSW Steel is what, billionaires, right? You follow these small guys. So small guy like whoever this is, Ganapati Vishwanathan. Of course, he has sold it. I'm looking at buys. Yeah, there are not many buys. There's only 1 buy, but there's again trust. I'm not interested. Yeah, there are a few market purchases, but again, it's limited or some cross transaction. So I'm not interested. Maybe I have to go back and select 1 more date. You'll get some buys. That's my rationale for insider buys. And because I'm creating a diversified portfolio of 30-40 stocks, yeah, some will go, some will lose, some will gain. And The max I lose is 2,000 in my 2 lakh portfolio. So now you also decide how much you can afford to lose. And you have someone to blame here. You don't need to blame me. You can blame this guy, Anupam, whoever is that, because he is the one who has given you that idea. If the trade misfires, you can go and ask him, why did you do that trade? It's a last minute trade.
Yeah. Okay.
Last row has buy. I don't know where. I didn't observe it. But yeah, I mean, you are getting the gist, right? Yeah, but this is again a limited. I'm not interested in limited guys. I'm interested more in individual, because this is a promoter. I don't know about this company, and you might be already. I mean, a company promoter generally will be rich than you one. Right? Even if a small company, listed company in NSE is worth at least 1,000 crores. Even if he has a ownership of 5% in that, and that means he's already rich by 50 crores. That guy buying 1,000 rupees, 1 lakh rupees is not really putting skin in the game. It is the employee, director, right? So this guy is like you and me. How much you will be getting a salary? He will also be getting some 30 lakhs, 40 lakhs if he's a very senior most employee. Like you and me, any software guys also will get 20 lakhs, right? Now he is putting so much money. So why can't I put my 20 lakhs salary or 10 lakhs? The same. And again, I'm not taking a risk like whatever that guy is taking. I'm just taking a limited risk.
Okay, thanks, Cora. I think we'll take this one last question Pranav has asked, and then we can close it.
Yeah.
Okay, so the question is, do you have any preferred way of segregating vol regimes to avoid situations like the recent months where the market was going crazy? I don't want to avoid selling vol because SSOIV.
Yeah, I'm not.
Yeah.
I'm reading this question, so this is also.
Yeah.
So the thing is, I will just give you a hint. It is we are running out of the time, and again, it takes a lot of effort to prove it to you. But take from me, the thing is, I will actually provide you the numbers as well. Your entire Indian market returns. If Nifty has returned, how much Nifty has returned? Let's say last 2 years. Number you must be knowing, right? Because you are trading.
40%.
Yeah. So your entire Nifty 40% gains would have come in low volatility risk. I'm not saying entire 40%, but out of that 40, 90, 36, 35% of it would have come in from low volatility regime. The rest 4% would have come from high volatility regime. Now, how you define low vol or high vol is it's you can do the research. Yeah, but stay in the market when you are in low vol, which is understandable, but stay out of the market when it enters into high volatility regime, because market gyrates a lot and it will give you a lot of pain. And by missing that high vol regime, out of this 40%, you will only miss 36. Some, I would say 10%. That is like 4% of returns you will miss. I mean, if you are actually looking at trading in and out and timing the market. If you don't time the market, you will get 40% returns. If you want to time the market, be in the market only during low vol regime. This is my rule. On the high vol regime, I will stay out. And my guess is entire low vol regime makes up the entire returns, makes up entire Nifty returns. I won't say entire, as I said, like 90% of the Nifty returns. Right? I'll give the insider link as well. I'll add here. And I think, yes, we can wind up. I mean, because it's more than 1 hour.
Almost an hour, yeah.
And
All right.
thanks, Ashish, for taking your time and hosting.
No problem. Always a pleasure.
Thanks, others who has taken and the time and joining for the show. I will post the video in few hours onto the YouTube.
All right. Thanks everyone for joining the call.
Have a nice Sunday and see what happens on Monday.
Yeah. Okay. Bye bye. Thanks, Cora. Bye.
Thanks.